Good afternoon and happy Wednesday, everyone. You have Alyssa Corman, Justin Nielsen here with a look at the stock market today. We are going to analyze what happened in the market today. We're going to take a look at a couple of different market charts. Then we're going to get into some stocks. And Justin, there was some very notable strength underneath the surface in a very interesting day in the market.
Yes, and so some of the stocks that we're going to talk about aren't necessarily the leaders of the past. We'll take a look at Halliburton, an oil stock, also Alcoa, kind of in the metals play, and we'll also go back to an old favorite, Chipotle Mexican Grill, CMG. So.
Yeah, all right. Well, we'll talk about this rotation of leadership, Justin. But let's take a look first at the Nasdaq here. What a reversal! The tech-heavy index closing up 1% for the day, so really strengthening into the close. Stunning day yesterday with some nice support at the 50-day line. So another day of support there. Meanwhile, taking a look at some of the other indexes, the S&P 500 up 1.1% for the day, the Dow up 1.4%, and the Russell 2000, Justin, up 2.4% for the day. So, all right, are we just we're just brushing off this pullback?
Yeah, correction over, I guess. So yeah, I mean, yesterday was wild, and again, it just seems like every time the market's starting to get hit, people are almost in that buy on the dip mentality. Now, of course, we do have the idea of stimulus coming forward. You had the Fed talking, and Powell, Fed Chair Powell, reiterated today that they're not at their employment targets or inflation targets, and so buying bonds is going to be still on the docket for a while. Easy monetary policy, and that's something that, of course, helps the stock market. More buying of bonds by the Fed leads to lower yields, and when you've got low yields on the treasuries and your risk-free investments, you got to look for returns somewhere else, and the stock market's usually where people look. So that's kind of that relationship there. Now, it was interesting to see that the S&P 500, the Dow Jones Industrial Average, and the Russell 2000 have been showing relative strength. It's not just the Nasdaq with the shine this time around, and this is something we've been talking about on IBD Live for a while, actually for a good portion of this year, that some rotation might be possible into some of these cyclicals, and I think you're seeing some of that now, where some more strength is happening in the other indexes, not just the Nasdaq, and they also held up a little bit better. I mean, if you look at the S&P 500, it didn't actually breach its 50-day moving average line. The Dow Jones Industrial Average barely breached its 21-day moving average line. Granted, these haven't had the moves that the Nasdaq Composite did, but again, they also weren't showing as much of a breakdown in their chart patterns. So, it just remains to be seen. You have to kind of be ready to go either way. This, certainly it doesn't mean that it's going to last. Right now, the pattern looks great. The fact that we got support, the fact that we rebounded yesterday, intraday, closed high in the range, and then we're able to follow up on those gains today is a good sign. But you also have to put in the context of how long we've been running, and how much longer can it last?
And before we get into some individual stocks, a quick look at the Russell 2000 here, just to contrast this one too, like the Dow just only came down to the 21 day, not even down to the 50-day. So some rotation does seem to be apparent. But in terms of a lot of the stocks that many CanSlim traders have been putting money to work in this rally, those tech names suffering a lot of damage. So if you have gotten pushed out of the market over the last week, or maybe even more, maybe selling into some of that strength when we were extended, how do you approach getting back in terms of taking a look at some more of those cyclical names, or are you trying to increase your market exposure on a day like today? How do you reconcile that?
You have a number of options. That's a great point. And so I guess my first piece of advice: how do you tread back in? Carefully. It doesn't mean if you got knocked out of a bunch of things, it doesn't mean that you want to go fully on margin right now. You let the market pull you in. You put some stock, some money back to work. If your decisions are right on those, then you continue. putting more money in. So it's again, you use that feedback of the market. If your decisions are right, then you can put more in. If you're getting wrong on the decisions that you're making, that's not a key thing to put more money, towards it. If you're off, yeah, and that happens sometimes as a trader. You can be off and out of sync with the market, and the last thing you want to do is try and force the market to bend to your will, because it just won't.
Hmm.
So you can't throw money at the problem and think that that's going to turn it. So one of the things that's a little bit of an issue with the cyclicals is when you're doing your fundamental screening and looking for those
Right.
earnings growers, these aren't going to come up on your radar. And with some of these, their relative strength ratings aren't as strong, and so they might not come up on your relative strength. So you have to kind of look at them in a very different way. Again, this is a little bit more of looking at the industry group trends. So you're showing Halliburton right now. The ticker symbol on that is HAL. This is an oil play, big oil play. And the group right now is number 20 out of 197. So there has been a big difference here. And if you kind of take a step back to the weekly, you look at the weekly chart on this and you see this major downtrend that's been going on, where it was just, under the 40-week line forever in this big downtrend. But we're not trying to catch the bottom here. This has had a lot of strength. And we were talking about this on IBD Live today. Look, there's been a big prior uptrend here. There's been a lot of strength. And even though the fundamentals aren't there, when Bill was making his model books, of the best market winners of each market cycle, there were those cyclical names, those turnaround companies that kind of didn't, follow the normal pattern of having those earnings growth. A lot of times what happens with these is the earnings will come on later. And by the time the earnings finally get solid and you're growing in a big way, that's a lot of times when the trend ends for that particular cycle. So again, that's the whole nature of cyclical stocks that you have to be
Hmm.
careful of. Going back to the daily on this one, this is kind of something that we were talking about as being actionable today, but it is also something that we actually put on Swing Trader 2 days ago. And so that was one of the things where we went a little bit lighter on this as a position size because there was a larger risk, where our stop was. But we were able to hold through yesterday's yesterday's big downturn, and we were rewarded with that
Hmm.
decision today.
That's right. And breaking out of this cup type structure here, 22.33 buy point and closing near session highs. And next on our list, let's take a look at Alcoa, ticker AA. Man, some strength coming into this stock this week, Justin, and a bit of an exclamation point today, up over 9%, breaking out of this cup here. RS line back at new highs, and some nice volume over the last couple of sessions to go with that.
Right, and that's not what you usually expect from Alcoa, right? This is kind of, this was on the Dow forever, and it was just kind of one of those slow poking names. But every now and then, you get these commodity moves that can be quite profitable, and so it's just a matter of kind of recognizing that trend. And you and I on the show have been talking about the metals for a while. I think we mentioned XME, the financial, and the ETF for the metals, and as you pointed out, metal mining ores,
Oh, wait.
that's a big one in terms of the industry group as well. So that's the XME, which has been showing strength, and Alcoa in the mining metal ores, number 6 out of 197. I will say, there's a question: is it extended here? Because while it's great to be buying things out of cup patterns, sometimes if it's gone straight up from the bottom without much of a break, that can be a little bit tougher, because you sometimes will expect a little bit of a pullback as something breaks out of a cup. It's very normal for that handle kind of formation to come into play. So that's just something to be aware of. I think there was another play, as you said, or as you're marking, there's that kind of downtrend you could have been playing. Or if you just kind of look, once it got above that 50-day moving average line and kind of past resistance, from a week ago, that was kind of an early entry opportunity. And it's not like Alcoa was all by itself. There was a lot of strength happening in a lot of the metal stocks. So it was a matter of, do you want to play the entire group with something like XME, or do you want to kind of go for one of the stronger looking names? And Alcoa was definitely one that was on our radar.
That's right. And just yet another example of these cyclicals, really flexing their technical strength, even with some fundamentals that aren't quite up to snuff with what you would want from, a standout elite can slim growth stock. But there's no doubt that there's money rotating into these names.
Yeah, and it's, it makes sense because, with there's a lot of the reopening plays that are kind of
Yeah.
coming to the forefront right now. And when start thinking about production, I mean, there's a lot of production that has been caught flat-footed because normally what they want to do in a recession is kind of pull back. And I don't think anyone expected the rebound to happen as quickly as it did. And, I think people were surprised that some of the things that rebounded as quick as they did. So, there's a lot of catch up to do. And if reopening happens, that's even going to require a lot more catch up on the production side. And of course, when you ramp up production, that's going to require more raw materials.
Yeah, and as the economy continues to reopen, will we see restaurants continue to get back on their feet? That's the anticipation. Chipotle's forward-looking earnings estimates pointing to some strong growth. Now, Chipotle did undercut its 50-day line in yesterday's session, but was able to power back above that level today. And it looks like some nice support at a round number, Justin.
Yeah, so it's back above that 1400, and I also like how it kind of got support at the top of that last base. So if you see that pattern recognition dotted line that got drawn, you see that it kind of got support right there, and so that's a great place for it to get support. Chipotle is not one that's necessarily going to move in a big way. You're not going to necessarily see 9% moves in a day. I mean, I wouldn't have expected that of Alcoa either, but here we are. But it's certainly looking strong, and they could benefit from reopening, but they benefited from COVID shutdowns
That's
too,
true.
because they really had their digital game really dialed in. The pickup is just so easy. I mean, my wife and I, we were driving home from something the other day, and we hadn't gotten dinner. We did it on the app, and I mean, she was in and out like in 1 minute. I didn't even have time to stop the car really before she was back out. So that's just something that either way, Chipotle is it seems to be like poised to be a winner here in terms of how easy they've made it for people to just get in and out of their restaurant very quickly and get their food. So that makes it easy. And again, with some of these, it's a little bit easier to hold them when they're not quite as volatile. So Chipotle offers a little bit less volatility, and that can help as well. Now, this does have average daily volume that is below 300,000. Usually we have a higher threshold for the stocks that we look at, but this is also a $1,400 stock, so it has plenty of dollar volume. So you can maybe forgive some of that lower liquidity in terms of volume for this one, because it does have that higher price stock, and it does have the liquidity for dollar volume on average.
So when you see a stock like this of this caliber retaking its 50-day line, how should investors be considering that in terms of being buyable and the position size that they might want to use with a trade like this?
So, I mean, you could use, like in this case, you could use 1400 as a potential stop. So if it undercut today's low, that would look a little funny, So that's not giving up a lot there. That's actually a pretty tight stop. And so if you consider that, now in this environment, and we talked about this on IBD Live as well, I might not be risking the full 1% of my portfolio on a trade that I normally would. Maybe I'm going to only risk 0.5%. So you take what your portfolio size is, multiply that by 0.5%. That gets you the dollar amount that you're willing to risk. And then you kind of say, okay, what is 1400 from here? What kind of risk percentage is that? You divide your dollar amount by that risk percentage, and that can give you a decent portfolio size. Now, you do want to just keep in mind, sometimes when you get that small risk percentage, it will say, oh, you can have this huge position size. You want to make sure that you're kind of doing a number that makes sense. If it says you can have a 50% of your portfolio in a stock, you might say, hey, you know what, that feels a little uncomfortable. Let me go ahead and move that down.
Especially given the current market conditions. But thanks so much for highlighting this, and if you want more color on the fundamental side of things, I did interview the CFO, and exactly what you were saying, Justin, their investments over the last couple of years in their digital strategy have really helped them weather the COVID storm. And it sounds like it's setting them up for a pretty great next couple of years. So we'll be keeping tabs on Chipotle, no doubt. Now, as we wrap up here, Justin, I do want to circle back about market exposure, because we've been talking about, especially when we were getting extended, about hedging with a day like today. Should investors be reversing course and, maybe putting on some long exposure on the market right now?
Yeah, I think again, we were kind of looking at the yesterday's high, in the markets as kind of a threshold. The S&P 500 hit that level early. The Nasdaq Composite, it closed above yesterday's high. So at the very least, you can be reducing that a little bit. If you want, you could wait to reduce your hedge until it gets above the high from 2 days ago. When things really started getting a little weak on Monday. But again, it doesn't have to be an all or nothing bet, right? You can do some reduction of your hedge now, or you can do all of the reduction of your hedge and put some more towards long. And again, it's the baby steps that are, I think, better to do rather than plunging, because if you plunge, then if things turn around, you can find yourself really kind of under the wire in terms of having to make some hard decisions, as opposed to when you allow the market to pull you in, that allows you to get some cushion on some names. And it's very hard once you get that cushion for it to take it all away from you. That's where you can really start, taking some profits into strength. And that just helps you kind of go forward and build on your portfolio. And, you might naturally reduce some of that exposure as we get extended, like we did a few weeks ago. But then you see a pullback like this, and if things start looking, like they're setting up, it's a great time to start buying a little bit back more. But also keep in mind, just the context, we've been having a lot of bounces off the 21-day moving average line, a lot of bounces off the 50-day moving average line. At some point, we do need a more intermediate correction rather than these very short two-day pullbacks that we come back from. So just be ready for that and have your exit strategy planned accordingly.
Great words to end on, Justin. We'll have to see how the market shapes up for the remainder of the week, but IBD is going to be keeping you up to date on all the latest. So make sure you check out investors.com/IBD Live. Join us for our daily morning live stream for more in-depth market analysis and talk about portfolio management, position sizing, all that great stuff, and our continuing coverage over at investors.com. Thanks so much, Justin, for your insights today. And thank you all for tuning in. We'll see you back here tomorrow.